What is good, YouTube? Now, we have the second day of the boot camp. Now, this is not going to be a 56 video boot camp on how to trade, because honestly, I don't think that you need 56 videos to go that in depth. Especially when you want to learn something as simple as a breakout strategy, right? This is probably the most simple way to learn trading. Now, do I think that there possibly are better ways to trade? Absolutely. What do we deal with when we talk about breakout strategy? We deal with volume. We deal with fake outs, which happen quite often when you try to hop in a trade early. We deal with consolidation. We deal with a whole bunch of things that pertain to breakout strategy. Now, I'm going to show you the 3 types of markets that you look at every day when you come inside the NASDAQ stocks or the US 30 stocks or NASDAQ futures, whatever you're doing at the moment. So if I can find my tools, you have 3 types of markets. You have a bullish market, which means we operate in higher highs and higher lows. Higher highs, higher lows, higher highs, and higher lows. Now, what is a higher high? A point that is higher than the previous high. So, for instance, this high is a higher high because it is higher than previous higher highs. This is a higher high if we also had another higher high linked to it. This is called a higher low because it's higher than the previous low. This is a higher low as well because you're higher than this low. This is what we call a bullish market. Now, we're going to get rid of this. And now I will show you a bearish market. So before I even show you, what do you think a bearish market is? If we are operating in a bullish market and we go higher highs and higher lows, what do you think a bearish market would be? Put it right here. Oh, where'd my thing go? Bearish. If I can spell. Am I tripping? Oh. I'm tripping. I'm slow. I don't know how to spell bearish. I make money. Shut up. See, I thought so, but it didn't make sense to me. All right. English language. Okay. It's not I speak Puerto Rican, okay? I'm a Puerto Rican person. No, I'm not. All right. Bearish market. We do the same thing here. Now we go lower high, lower low, lower high, lower low, lower high, lower low. And it is the same thing as if we was going up, but now we are trending down. So these are no longer higher highs and higher lows. These are lower lows and lower highs. Now, it's simple. I promise you it is. Lower low, lower high. Lower low, lower high. lower low, right? So if you now you kind of see the like the pattern of what a lower high and a lower low is. If you don't, watch this video over and over and find examples of a lower high and a lower low. Now, the easiest market structure that you will see and be able to spot is consolidation markets, which are we're not going anywhere. We're staying in a range. There's no higher not higher lows, my bad. Higher highs and higher lows being created, and we are just stuck in a range, which is where, if you watched yesterday's video, matter of fact, you don't even need that. You need a rectangle, which is where these rectangles come in hand. Now, we're not going to get into that yet, but you get the memo. So this is a consolidation market, and I'm just going to put C because all this typing is too much. Consolidation. So now your homework to learn this is go to the market. So down here, find where you see a bearish market, a bullish market, and a consolidation market. Now let me tell you, consolidation can happen on higher time frames. Well, they all can happen on the same time frames, but now I'm going to show you them in action. So for instance, today was a really bullish day. Look, hold on, go to the 15 minutes so you can see it a little better. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And we've done this, if I move it to the side, we've done this all day. Now we're at all-time highs, and I think, the all-time high was right here. So I think we're just going to continue going. You never want to trade against the trend. The trend is your friend. Write that down. So if you have had your notebook, I want you to put at the top, title it Market Trends, just so you can understand what a market trend looks like. Write it down. Boom. So this is a bullish market. We've been in it for quite a while now, and pretty much all the US stocks have been in this higher high, higher low for quite some time. So now, what is a bearish market? Same thing. This is a good example. Lower low, lower high. 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 Lower low. Boom. Right? Same thing. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. Same thing. Now, consolidation. When we talk about the breakout strategy, we always, not always, but a lot of the time, what the market will do right before market opens is have a period of consolidation. Now, what does consolidation look like on the markets? Right here. We are trading within a range. Now, when you go and draw your boxes, it does not matter how, actually, I'm lying. When you draw your boxes right before you trade, you don't want to have a big box that shows the whole consolidation. You don't want to do that. Now, you could, and I'll show you how in a second. You don't want to have these big old boxes, but if you want to trade this way, I'll show you how to. So you just want to kind of, where price lowest touched, like where price has multiple touches is exactly where you want to put, your support. Support is on the bottom, which means the floor is support. The roof is resistance, right? So even though we kind of, if you look to the left, we don't have some to the right, but if you look to the left, we've kind of created support and resistance right here. We've, ceiling or roof, we broke through the roof, made it our floor. Now it's support. Boom, boom, boom. Broke through it. Now this becomes our floor. This becomes our resistance. Now we broke through it again. And boom. So I'm going to show you today's trade. And I'm going to give you an example and a breakdown of what today looked like for me. So I woke up at 8:35 on the dot, which means I was late. When you show up to the market, you want to show up at least 30 minutes before so you can prep for that day. Now, if I wasn't being delusional, I think today would have went way better. But here's what happened. So 8:35 was here. Oh, this is 15 minutes. That's why I'm tripping. Okay. 8:35, 8:30. So let's look at the overall market trend. We were here at 8:35. So around consolidation, here's what I would have done. Now, it can get confusing at times, but you want to look at overall market trend anyway. So this shouldn't be a problem once you understand the logistics behind what I'm doing. So we were trending in a downtrend for previous day, right? We also had a period of consolidation from right here to right here. Now, like I said, it doesn't matter how big you draw the boxes as long as you have a range. Now, if you drag it, make it even so it doesn't look as wonky, because I think I might have a little OCD, whatever. This was at 8:15. Now, you do not trade before 8:15. And now that I see that this is acting weird, I'm going to come over here and fix this for y'all so y'all can see. Okay. So find that period of consolidation, and then you wait. Literally what the freaking strategy says, you wait for a breakout. So we broke out right here. Now, does this mean you hop in the trade? No. This does not mean you hop in the trade. You have to see what the market is giving you. So, like I said, if y'all didn't listen, market opened on this candle right here, right? So, in that case, what I did this morning, we can get rid of this. Now, you can keep the trend line because that's actually very helpful. We had some touches of a support and resistance right up here, right? So then we had resistance. Honestly, we were in a really bullish market today. We didn't have that much resistance, so I don't recommend this, but you could always go down to the 1 minute and find your resistance there if that's what it's giving you. So I would put resistance right here just because we've had some touches right there, and boom, this is what our setup would look like. Now, you never want to take a trade on the 1 minute, especially using breakout strategies, because you will get faked out almost every single time. So hopefully you're still with me. If not, backtrack, look at your notes. It's simple. This is just a trend line, just so you can see what market is doing. This is a resistance. This is support. Boom. So now, preferably, you would want to wait on a candle close above the support. Now, the reason I would say preferably is because a lot of the times when you're taking trades, a lot of people like to go in early. And it's not a problem. It's just your preference and how you trade and whether or not you want to hop in there and try to catch the whole move versus you might get half of the move, right? So for me, I waited till the candle closed because I didn't end up waking up until 8:35, right? So I caught, let me show you. I ended up 8:30, 8:35. I ended up catching this move right here. Now, did I really catch it? No. I ended up getting stopped out with a 20-point stop right there. Give me a second. Hello?
Hey, Caziah, hey. It's Anita. So I was thinking, you don't have to, but I know on Saturday the 27th, what are the guy? I mean, yeah, the other guy, actually, Jackson, he's getting a photo shoot done at the Baker's Gym in Frisco.
Yeah.
And you can go there for me to take photos too, because you can't really create your profile if you're not going on after headshots. You know
Yeah.
what I mean?
Yeah, I'll go on Saturday.
Can you do that? Like, what can you do? Like, if you like, can you do the half now and half?
Wait, how much are they?
Well, the headshots are 450.
I thought that's what I thought I paid for that.
So that was the registration. So what you could do too, because I like, okay, how would you do this? Okay, I would just do like, I would just do half. Yeah, so for the registration, because registrations were 400. Some people already have headshots, and then headshots are 450. So like, what I could do is let you pay half, and then the other half you can pay whatever you want.
Okay, yeah, we can do that.
Yeah, so pay it, and then just put at the end of the year too. Like, and all this stuff is tax deductible, so you get it at the end of the year when you're fine. But so yeah, let's do it. Just let me hurry and get you a headshot and start submitting you. Um, the other guy that he just signed training before you guys. He just did his first audition for Disney, and he's already he has he's on hold. So meaning they made him the job for his very first audition.
Yeah.
You never know, it might happen pretty soon. So why don't we do that? So at least just do the half, right, and then the other half we'll take it.
All right, thank you.
Sure, no problem. Okay, Caziah. So we'll just text with you once we're off the phone.
All right, bye.
Okay, see ya.
All right, man. Sorry, that was some modeling stuff I had to do. Whatever. All right. So I took this. I got stopped out, and we did 2 trades today, and I got stopped out on both. One was on US 30 and one was on Nasdaq, but we got stopped out, and then it ended up running. So you see, breakouts work. They have like my thought process was there. Sometimes it just doesn't go your way. So as goes for what you target. Now, when you are hopping in the trade, you only want to risk around, when you're on a prop firm, 10% of your capital. So if you're buying a $2,000 prop, or let's say 50K, it gives you $2,000 worth of drawdown, which means you only want to risk $200. right? So you do that, and when you go to target, you can target two things. You can either go previous liquidity, which we're at all-time highs right now on NASDAQ, so that wouldn't even make sense. Because if we targeted previous liquidity, you would have maybe caught half of a one-to-one. So you don't do that unless you have liquidity sitting on the left. Now, I have my Fibonacci retracement, which helps you look at percentages, right? So I normally target a 1 to 3 and call it a day. Now, depends on your risk tolerance, or not risk tolerance, but depends on your tolerance. You can go for 1 to 5s. Shoot, you could even try to go 1 to 10s. Now, there's occasional days where we hit 1 to 5s, 1 to 4s, and they happen quite often. Now, they don't happen all the time, but they do happen. So I would say on average, I'm hitting about a 1 to 3. But this is what I will recommend when you trade either live or prop firm. I recommend you take half of your position off at a 1-to-1 and let the rest run. That way you could secure some profit. Now we'll get into that a different day, but that's it. That's the breakout strategy in a nutshell. I broke it down a little bit for y'all, but it's really not that hard to understand the technicals of what you're doing. Now, the hardest part, which is what I'm going to give y'all in the next video, is emotional freaking control. That's really my biggest problem that I had, was emotional control, which took me 8 months to figure out. So that was the strategy. If you want to, learn other things, cool, but this is probably the most simple strategy that can make you money. And you've seen it from me first. If you're in my Discord, I just took a withdrawal last week using this strategy. So I will see y'all tomorrow. Life's good, life's great. Or I might post another video today. So I'll catch y'all in the next video.